In this video, we're going to be talking about why it's important to keep the bigger picture in mind when you're buying a business, and that you got to know your strategy when you're looking at a deal. You can't just get lost in the process of is it a good business buy or a bad business. You got to start from the very beginning, knowing what kind of deal is going to fit your strategy and how we can execute deals that fit that. And here's the background on this topic. So, just today, we met with a seller with some of our clients that we're advising. And the business does specialized finance or structured finance for life insurance policies. So basically, what they do is they design policy loans, they fund them through banks, and then on the back end, they manage the loans for these life insurance policies. The biggest need for this is that there's tons of high net worth investors, business owners, people in general that want to get life insurance policies, but they might not want to pull out their own cash for it. So companies like this will lend out money to fund these high value life insurance policies. Which the great thing is that this creates recurring revenue, which means as long as the policy is still being paid or until the policyholder dies, they're going to keep making money. The distribution network, so a lot of the policies come from carriers themselves, so they aren't relying on just referrals from agents or anything like that. They get all the clients from carriers and from their relationships with banks. It's a fully remote run business, family run operation, and the owner's just looking to retire. The business is good, strong numbers. They're doing about $1 million in cash flow each year. The year before, in 2023, they were doing about $2 million, and so they're kind of down 50% from 3 years ago, which can be an issue. But the biggest reason why it fell apart was because of the owner's dependency. So one thing that we learned when we're looking at this deal is that 3 years ago, the owner tried to retire, but when he passed over the business to the person that he thought was going to succeed him, he actually ran the business into the ground. And over the 2 years that he ran it, it dropped basically 50% to where it is today at the $1 million mark in cash flow. So the business itself, though, is really highly dependent on the owner, which, as you would guess, it is, right? It's a really specialized business. Doing structured finance advising is a really niche business, and is a service that only a few people can actually provide. And that's what we see here with this business. It's a strong business. They provide a great service. They have excellent relationships with carriers, with banks, and just an excellent reputation in the market. But the issue from a buying standpoint, which is this is the main point of this video, the main issue from a buying standpoint is highly dependent on the owner. So when the owner leaves, the buyer is going to have to be very hands-on. And this kind of goes into the topic today of knowing the big picture behind the business and your strategy. So because this business will require active leadership, and this goes for any business, right? So if you're watching this and you're looking to buy your first business, this goes for any business that you're looking at buying. If it's going to need active leadership, then that means that you're going to need to be the one who runs it. We have a lot of people nowadays who want to get into buying businesses, but they want it to be passive, that they don't want to work it. They just want to take in the cash flow. And that's great. You can have that goal, but you're not going to get many deals done unless you're taking minority interest in these deals, or maybe we're doing different asset deals or equity deals like that. But you can't come into this space, I think, wanting to buy a business and not work it, right? And that's what this business requires. And this goes with any business, but specifically for this case study here. They do structured finance, really highly technical service to provide. It takes a lot of experience and knowledge to do it right. So one thing that they have on the back end, at least, is it's not just the owner. So they do have a team in place, but they're all a bit older and they're going to need to be replaced soon. So we're going to need to build SOPs and systems, SOPs for each role of the employees and what's needed, and systems to hire and train successors. Next, we're going to need to lead operations sales. So a lot of the current sales comes from these carriers and advisors, financial advisors who refer over these high value life insurance policies to get these loans on them. We're going to need to really systemize the operation themselves because the owner is just taking phone calls. He's not really doing much. It's highly, it doesn't seem like he's doing much marketing internally, and like he's a bit older. So this is all improvements that's going to need to be made by the buyers. Next is a set structure before stepping back. Now, the biggest thing I want to talk about right now is just how will you use this acquisition? Whether you're looking at this business to buy or you're looking at any deal, this is a really common case study where the seller is the main operator of the business. And you need to really take into account what your goal is. Now, is it bad to go and buy a business that is a owner operated business? Of course not. But you can't go into this deal and expect that it's going to be passive for you. And you can't go into a deal like this and expect that you're not going to have to work it at all, or else you're going to be really upset. Now, there's two main plays that I see that work well for this. So first is just a fix and flip method. For this, you're going into the business, you're taking over operations, you're working with the seller as the consultant, as the teacher who's going to be helping you out because he needs to still consult you on how the business works and educate you and pass over his experience, his contacts. And you're going to go into it, you're going to provide all these upgrades that needs to be happened in the first 2 years to make it a more sellable and efficient business. And then just resell the business. And the second play is just really treating this as a strategic platform play, where you're going to take the same method going into the business, but really having more of a long-term hold mindset, using this as a foundation for future acquisitions and different asset acquisitions, equity plays as well. And you're just going to integrate this into your holding company. Now, in either case, you're going to still need to dedicate time into a business like this. And I think what we see a lot of, I was just talking to a partner of ours, and we used to have a coach in our community about 4 years ago, 5 years ago now. And, he was really happy to get deals done. He was really foot trigger happy. He was buying and investing in multiple deals. I think over the course of 6 months, he probably bought about 4 businesses. And in the next year and a half, he went bankrupt because he was really excited to be buying these businesses, but he wasn't even running them. He was trying to do what everybody wants to do, which is buy businesses and make them passive. But you can't do that. Not fully, because businesses still require time. And that's the biggest thing that we learn about the difference between even business acquisitions and real estate and why you see a lot more investors in real estate than this space. Because everybody wants the passive income aspect, everybody wants the cash flow, but you do need to dedicate time to these acquisitions. Not always, but for the most part, these businesses are going to need to require your time unless you have a team in place that can help manage operations, unless you have a team in place that can oversee what needs to get done for you, or you have a partner that will take lead as the CEO for you. In either case, though, there's going to still need to be work done to implement what needs to be done in the business to make it more not only sellable for you, but just more efficient as a business, right? Because businesses like this aren't usually sellable yet. When we were talking to the owner today, all that I heard was that he's not ready to sell yet. And that's why he still wants to keep the business for 12 more months because he knows that he can't sell yet either because it's fully reliant on him. So if you were to buy the business like this today, you need to keep the bigger picture in mind. Are you buying this just to flip it? Are you buying this because you want it to be passive? Are you buying this because you want it to be a part of your portfolio in the future and the future businesses that you buy are going to leverage this high value life insurance company? Or what's your play here? What's your strategy? Why are you looking at this deal? And there's nothing more important than that mindset when you're looking at these businesses. And it's going to save you just time and headache as well. And so what lessons can this kind of teach us? First, know your bandwidth. Don't buy what you can't lead. If you're not willing to dedicate your time to improving a business that you buy, then you need to change your strategy and the kind of deals that you're approaching. Because just doing straight buyouts might not be your best bet, or the kind of buyouts that you're trying to do will need to change, or the structures of those will need to change, or the kind of businesses and their models will need to change for you to achieve that goal. But you can't go and try buying a business like this or any others with a similar model and expect that it's going to be passive because the business is going to fall apart and you're going to go bankrupt. Define your exit. Always define your exit beforehand. So that kind of goes back to this part. Is your goal just to flip it, or is your goal to use it as a platform for the long term in your portfolio? Three, structure for safety. When you're doing deals like this and you're highly contingent upon the seller staying on, you're gonna need to have some earnout, and the owner needs to be okay with that. Because it's so risky that it's all his contacts, all his experience, all his expertise. If you just cash him out up front, I mean, that's just not what you want to do in these cases. You want to have some earnout structure in these kind of deals at all times. So ask yourself this question. This deal looks good on paper, but pause. Do I want to own this business and lead it, or do I just want it to be passive, right? And that's just kind of what we do here. So at our firm, we help advise our investors, our clients, because they don't want to do it alone. And most people, when they're buying their first business, they just don't want to go through the process by themselves. So our team, we go hand in hand with our clients to help them buy the businesses, build their portfolios, and do the right deals. And we advise them, we partner with them, we invest in their deals, and we just be their advisors that they need. And so we have a few free offers as well, and a webinar coming up. But all this comes down to just this part right here. Don't underestimate what a deal will ask of you. Buying a business is not just writing a check. It requires focus, execution, and leadership. And you can't scale across multiple companies if you're not stable in the one. You got to know what you're signing up for with every deal. And I think I can make a follow-up video on just this slide. With every deal that you're doing, you have to understand what you're buying. And that you can't just want to go out and buy multiple businesses and expect that you can't just let this one just be passive and it'll run itself, because it won't. You gotta give your time and energy to every business that you buy until it doesn't need you anymore. And hopefully by this point you have a team in place, there's a CEO. Those are all exceptions. But for the most part, if you're buying businesses like this in this case study, you can't underestimate what it's going to require of you, because it's going to require everything. All right, last slide. What's your end game? Are you trying to flip it for a return, build a long-term asset? Know your strategy. That's the main message in this video for today. Know your strategy and work with an advisor. I think it's important to know that you don't have to go out and do these deals by yourself. It's good to have a third party eyes on every deal that you're doing. And we don't want you to go bankrupt. Like, that's the last thing that you want to do. So take this to heart. Go into every deal knowing what your end strategy and end game is going to be, and just follow this framework and you'll be successful. Please keep an eye out for our future videos. If you like this video, please leave a like and a comment, and I'll see you in the next one. Thank you guys.